Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 26, Monday, starting the week, the last week of February. Today, we don't have a lot of economic data, but we have some news in terms of new home sales. As you can see, month over month, from 7.2% to 1.5%. So really coming lower than expected. And also new home sales, we were expecting on January 0.68, 0.66, a little bit of pullback from the sellers. And in terms of note actions, we have a lot. 2-year note at 11:30 and 1 p.m. in half an hour. We are going to see these two, the 3-month and the 5-year. But look at these yields, 4.7 instead of 0.3 previous one, 5.11 instead of 5.1. So yields continue going higher, and I don't think this is good news for the market. And the big news is going to be on Thursday. On Wednesday, we will have GDP growth rate quarter over quarter. This is an estimate for the Q4 last year. But on Thursday, look at this, PCE spending. We are expecting a higher than expected reading in both PCE and personal income. Instead of price index, also month over month 0.3 and a little bit of decrease, but overall we are expecting to see an uptick also on PCE. We saw that on PPI, we saw that on CPI, but also on PCE is expected. Let's see what happens on Thursday. In terms of rate cuts, they are still pricing in the same kind of path moving forward. Starting on June, they will start cutting the first time, the second time on September, and the last time on December. Only 3 times cutting into December, and then next year, another 1 time. So 325 basis points is 75 basis points, way lower than the initial 150 basis points that we're expecting, were pricing in markets last year in November. Remember that? So economic data will have to be patient through all the week, and day by day we have to suffer this market that, let me tell you, this market is not willing to pull back. It's quite scary to think about how this market continues to buy the dips. Remember on my weekly recap last Saturday, I've been watching this candle as the second time as we've been rejecting all-time highs, and we pulled back quite heavily into the close, closing almost at the close. So why I'm saying that? Because after this week and also these weeks, this order block here is holding the price today. It's been holding during overnight, and this inverse fair value gap on the 1 hour, this is a 1 hour fair value gap, we are pushing it, and this is unbelievable. Let me tell you why. Nvidia is insane. Remember, the daily on Nvidia was also signaling a reversal, or at least a huge pullback, or buyers to step in again on the gap on earnings, but it's not willing to pull back. Initially it sold off, but again people is just buying the dip. Buying the dip is still working, even though only Nvidia is showing these kind of things. Google is minus 4% and Tesla is plus 4%. So this market is really dangerous right now. We've been coming off the, let me hide all this before. We've been coming off the daily. Remember this rejection candle, and this fair value gap is the one that I was watching today. I was bearish, not bullish, but I still played some longs into the overnight. So this was the overnight for which I woke up, and this liquidity, I was waiting for it to, when it started going lower on the, before the London Open, we tapped this double bottom and we start moving higher and higher and higher. We took this first liquidity pre-market high at that point, and then we flashed. And I said, okay, let's see what happens with this inverse. This inverse got run through, and that was my first trade. really seeing all these pushing higher, taking this liquidity and starting to see momentum in these two. I bought the pullback with the stop at lows of that candle. That's only 8 points of stop and targeting the next resistance. The next resistance was this pre-market high up here, and I got the 30 points, almost $600 in a quick move. And during all this move, we were not pulling back. Then again, pushing higher and into the open, into the open, we started to pull back a bit, moving lower, consolidating, and then at 2 a.m., big push. Look at this manipulation move. Boom, boom. And as soon as I saw this manipulation for this week and also these lows, I bought that candle. I bought the bottoming tail, the huge candle for 6 points, really cheap trade. Just wanted to do a scalp for this, all this liquidity that is being generated. So we got the market structure change up here, and then we pushed that another 27 points. And I was quite surprised seeing that the Nasdaq at that point, the individual stocks, the Magnificent Seven, were not super bullish, but we were continuing going higher, and I was just trading the price action that I've seen. And with these two trades, I just wanted to see the open, into the open, bull trap, and knife down, taking this liquidity. And again, buyers stepping in, buying the dip. Look at this price action. Choppy price action. Today is a day in which buyers continue pushing, buying the dip because Nvidia and AI, but that's not. Apple is in the red, Microsoft is in the red, Amazon is in the red, Google is in the red. Yields, the 10-year, it's 1% today in the green. The 2-year, it's also 0.66, breaking 4.7%. That's not good. But still, the Russell keeps pushing. So the S&P more or less is holding up here. Remember in my weekly recap on Saturday, I was mentioning that this was nasty candle, but the S&P is holding the previous all-time highs. It's not the same as the Nasdaq, which rejected up here. So what kind of price action are we going to see into the afternoon? I wouldn't trust this. I don't trust this because these stinks. Just let me show you the 1 hour straight. So basically, this was a manipulation move, which I've been projected into the downside down here for 2.5. And also for the pullback of this range, everything is aligning down here. If the Nasdaq were just to pull back a bit to this level, this zone, I would buy the dip. I would be super bullish down here if I were also an investor. But it's not pulling back. After the Nvidia earnings, people keep pushing and buying every dip because Nvidia is one of the most traded stocks right now, even higher than, let me remove this, even higher than Tesla. So all the retailers are jumping on Nvidia with options, with hype, with FOMO, just buying and buying and buying. And the result is choppy price action and also the Nasdaq doing weird things. We are not supposed to move this high, but still in the highest, in the big scheme of things, this 1 hour is still holding. This 1 hour is still holding. And this Fibonacci traces from up here to the low down here, and we are right there at the golden pocket 61.8 retracement and also a 1 hour fair value gap inverse. I mean, this is a bounce. I will tell you that. This is, I will agree with that. But that doesn't mean that every single dip and we are super bullish. I'm still bearish. I traded into the long side into the overnight because I was seeing price action was willing to bounce higher. But up here, with this fair value gap on the 1 hour, this fair value gap is still holding, held here and hold here. I mean, be really careful because I think higher time frames are still selling this market. Dollar is barely in the red, yields are in the green, treasuries, look at treasuries. Treasuries are selling off. This is just Nvidia and Tesla. And even banks are mixed bag, mixed sentiment. So be really careful. Also, crude oil, it's 1.74%, $77, really pushing into the 80s. 1, 2, 3, and 4 times at this zone is being rejected. Crude oil is pretty bullish, and that's pretty bad for the markets. So be smart. Gold is also in the red. Be smart. I will say it again. This price action is not bullish. We are moving higher, but we are doing so in a really, really choppy way. And the higher time frames, don't focus too much on the 1 minute, on the 5 minute, on the 15 minute. It's good to see that for entries, but look at the 1 hour. The 1 hour is telling you that this is not bullish. We are just up here into the fib retracement after this huge move. We are most probably rejecting the 1 hour and continue into the sell model that I think we've started with this manipulation move. So that's my analysis. You can agree, you can do your own diligence and do your own analysis and trade whatever you think is happening. But I think this is a huge bull trap in higher time frames due to the AI hype that Nvidia is just fueling into the market. So be really careful, seriously. And Thursday, it's PCE. At least wait for that. Be really patient, be disciplined, and manage your risk at the extremes in this market. Because I still think we are going to reject these levels and continue lower in higher time frames, meaning 1 hour, 2 hours, 4 hours. I think that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over. Today is pretty dangerous, really choppy, and I still think in the higher time frames, I'm bearish. Lower time frames, I did my job. I played longs into the overnight for this bounce, but I think this is just a bounce on the higher time frames. Be really careful because the sell model will continue lower, in my opinion. Remember, discipline, patience, risk management are key for your success. Stay safe, everyone, and see you tomorrow.